a little concerned about that. But remember, as long as it kind of goes sideways or just drifts lower, we could still trade it for, just a couple day trade until it resumes its strength. CBNA has been on our long watch list, but we have no entry yet, but I'm watching this for a core long entry. MU, in our advisory letter, we have two trades. We have a bull call diagonal plus a put spread that expires today, far away, the 48 strike. So, it had a very weak close. So hopefully it can get, our stops under this tail. So it needs to get off its butt here on the 15-minute chart. Halliburton, we also sold a covered call. See, that's gapping down today. So that was a perfect legging into covered call on Halliburton also. Now let's look at LFIN. We talked about yesterday. We short the puts, expired today. Keeping my fingers crossed I don't get assigned over the weekend. But I won't know that until Sunday morning, because that's when Thinkorswim sends exercise notices, typically on, Saturday night. So Sunday I should know. A bunch of earnings trades. GE, I forget who did it. Yesterday we had a conversation about selling the 13.5 puts. Nice job. It's gapping up. Monthly climactic. So maybe the worst is over. I mean, the thing's gotten clobbered. Look at this. High $32 all the way down to $12. That's quite a haircut. I just wish it had higher premium, because then on this earnings gap, we do the same thing every day, wait for an intraday setup, and just short the heck out of these out of the money puts, the 13s now. But, I don't think we're going to get too much juice for it. Eric, I don't know if it's earnings or not, but, look at this gap, 773. So it's an excessive gap. So I can't trade it right now. But look on the monthly here, downtrend, deep retracement into resistance, higher low, consolidation, now gapping up to a higher high. So this is a bullish monthly. And the target, might come all the way up to $9.5, $10, but there's no entry. I'm just going over gap things here and showing you what I think about as new trades. SKX is getting its clock cleaned. And that's a defined term in the trading world. So look at it. Here's my daily, bottom left, weekly, bottom right, upper left. It's at 3160 right now. So mark that. The numbers don't even show on my daily. So let's go down to the weekly chart. Where the heck is 3150? My God, look, this poor thing. Look at that. All the way from, mid-October, it's giving up that entire bullish run. So I have no idea what to do with that. We just have to wait and see what sets up in the first hour to see if there's any trading opportunity. Honeywell, daily's a mess, weekly's a mess, bullish monthly. Now it gapped up pre-market. Wow, sold off all the way into the close. Now it's, provided the volume is accurate, and it's churning its way back up to 150, 150. So then I come to my daily. Where's 150, 150? Roughly right around here. So it's gapping into resistance, but, it's gapping over these three bars. So this would be a candidate to sell a next week, some put under here. Because remember, on earnings, the volatility is still going to be high for the morning session. So as long as I get a bullish setup, Honeywell is on my watch list. Here, just so I don't forget our PM from yesterday. So we had, the hourly got oversold. I still don't have a trade, but, this right there was showing signs of stabilization, and now it's just drifting flat. So maybe a 30-minute high will look about selling some put spreads for next week. But the daily, it's not a high confident trade, because look at this, pro gap down, wide range bar, massive volume, bearish weekly, bearish, so, I'm not rushing into it. That's for darn sure. Some more gaps here. Man, oh man. I can't tell this volume. Wow, this looks very close to that Honeywell, almost, Anyway, I just have it in my mind here. We'll see what happens in the first 30 minutes, but I can't tell now. RF, the daily is just a massive amount of resistance here. I would prefer shorting it under these lows, but you can see pre-market all over the place, and it's, up 9 cents, nothing to do. Slob, SLB gapping down. It's not as extended as some of these other oils like the Oxy, Halliburton, XLE, so it's been lagging that. But I still like the weekly and monthly for a bottoming pattern. So if this can come in, over the next couple trading days and give us a new setup, we'll consider another put spread. But with a gap and down, nothing to do now. Waste management, WM, ugly daily, breaking down on the weekly, volatile here, and it's, gapping down a little bit, but I can't tell. But 30-minute low is an idea on waste management. I will be watching that. IONS, gapping up close to $50, which is excessive here. There's no trade because the gap's too much. Nothing to do. STI, another bank, gapping down. This is bearish gap. Look at this, gapping down under this support. So a 30-minute low is a shorting opportunity, both for a day trade short and out of the money call spreads. I will be watching that. SFY. Or is it SYF? Let's try that. There we go, SYF. We have so many things like this. We're breaking out of the multi-month bottoming here, but we still have resistance to the left. And that's what Greg's been talking about for weeks here, that even when we break out, it's going to be a churn. It's not going to be off to the races. But gapping up to 36.50. It's a bullish gap, but resistance. I like the monthly reversal bar here. There's just no price for it. It's not a tier 1 trade. EGP. I see no pre-market action here. That's weird. But I like the daily. It came up, took out this prior high, little, pullback, a third into this. Now you notice how I don't use fib lines. I don't even know how to use them on TradeStation. And I just eyeball it. So you don't need to get crazy about this. But look, just remember I told you the unconscious competence? Look, new low, failed bottom, sideways consolidation, breakout, another new low, no follow through, still nothing to do. I'm just, came back sideways, converging 20 and 50, breakout, took out the high. So we have a new high, we have higher lows, we have curling 20 and 50. We had pickup in volume yesterday, even though it was on a down day. But the low from here to here, shoot, just eyeball it. The low from here to here in the pullback is roughly a third. I don't give a shit about your 68.2949er. The markets don't work that way. It's a bullish retracement if it holds. The weekly here, this is an ugly but effective W formation. Now, I'm actually going to just continue, talking a little bit more into the open here. Greg just texted me. They got construction going on at his house, and, just the noise is too loud. But that's fine. He'll get on whenever and we'll do our thing. I like this big W formation on the weekly. Upper right here, it didn't even come to minor support, which is this breakout area. It still came down hard relative to, and here's what I mean by that. Let's count them. 1, 2, 3, 4, 5, 6, 7, 8. So it went up in a nice, well, I don't know if you call that nice because there's some tails in here, but it still went up 8 months before it had this breakout engulfing at new highs. These 3 red bars are more vicious selling. Why? Because they're bigger. So what took 8 months to go up, 3 months, it came down more than 50%. But I still have a bottoming tail. I have 2 green bars, and I have a rising 20, 50, and 200. So I have multiple time frames in alignment right now. So this, I'm going to watch this. If this can take out yesterday's high, I can't tell what it's doing pre-market, then I will be all over this for selling a put spread. Let's see let me see when, I don't know if that was, is that earnings today? Because sometimes I just mix in my earnings with other gap trades, but let me check real quick. EGP, I don't even know what this company is or does. Isn't that funny how we make money? We don't trade fundamentals. We just ride with who's in control of the stock. All right, yeah, it had earnings after the bell yesterday. So East Group Properties. So I don't know if that's a REIT or a management company or whatever, but if it's a REIT, then the rising interest rates hurt it. Now my put premiums are going to be entirely misleading because, yeah, REIT. All right, thanks, Greg. Yeah, I had earnings yesterday, so yeah, we got another quarter ahead. So my puts are going to be ridiculously misleading because they're priced for earnings, so they're going to deflate. But as I keep saying, I prefer and love selling calls and puts, just, credit spreads, the morning after earnings on compelling patterns because we don't have the earnings gap risk. So I'm just looking at the puts anyway. Wow, for May. All right, see, that's not enough juice. Even into earnings, I'm shocked. The $80 puts closed at 25 cents by 50. So the options market was pricing in, not a catastrophic gap. But just, I got an email yesterday into the close. I just want to, and this is a little bit off subject, but again, yeah, Dan, I'll look at that in a second. I just wanted to, since I have extra time this morning, tell you what I responded in an email to a subscriber. I possibly, he heard us talking about Tesla relative strength yesterday. So the market was selling off all day. What did Tesla do? Sold off red, green, red, green, red, green, busted a move in the morning session, and then higher highs, higher lows, and closed near the dead high. And so the subscriber emailed me saying, hey, what about selling I think it was either 295 or 290 put spread. Yeah, I think it was 290. Yeah, it was. It was 290, 285 that expired today. And it was 30 cents. That's what he asked me. Hey, Dan, what do you think of this put spread 1 day of risk? I said, look, I can't answer that for you, but I'll help you analyze it. I said what I just said to you. Very bullish close, bullish consolidation, relative strength, little failed breakdown right here. I said technically, meaning technical analysis, the odds are very high that it's going to work out. But I gave him a big caveat. I said, it's up to you whether or not you want the overnight gap risk. I told him I wouldn't do it because I don't want the overnight gap risk on Tesla. He is a gappy wild beast. And that's why the options are priced the way they are, as opposed to that little REIT we just looked at, EGP. So it is gapping down here, over $5. But if he did the 290s, provided it doesn't get ugly, just eyeball it again, it's 50% gap. So that's fine, provided it doesn't get ugly. Secondly, the options markets premiums are going to be less today because they expire at 4 p.m. So the overnight gap risk is or not, the overnight gap is already out of the bag. Therefore, and in fact, I'm going to be busy looking at, well, you know what? I'm going to do it anyway. Watch. Here's what I'm going to do. I'm going to load up Tesla because we do this all the time together. And one of my favorite statements in selling credit spreads is the stock went against me and I'm still making money. So what I'm going to do, let's see what they closed at. And you got to ignore the first 5 minutes because they're so darn spready. But at 9:35, let's look at the value of this put spread. And even though it's gapping down this much, it's not going to be catastrophic at all. I think it's going to be greater than 30 cents. That's not what I'm saying. But I don't think it's going to be catastrophic because it's a race. It's a race to the end of the day. All right, Tesla. All right, 290. Sell the 290, buy the 285. Okay, well, it closed at 24 cents. So by the time, he emailed it to me, it was 30 cents. So I guess, he emailed me here or whatever, and then it went higher, making the put spread less. All right, so enough on that. AXP. Dan, pro gap yesterday. I looked at this with you pre-market, and to me, in terms of a tier one, it wasn't a tier one for me because I thought the gap was excessive. But you'll see many times that you think a gap is excessive and go look at it the next day. And yeah, it's big. Look at it. Look at the past. Here's a gap. Here's a gap. Here's a gap. Here's a gap. This is massive. It's a massive gap. But let's look at the intraday. Strength all day long. Third pullback. Back to resistance, going sideways, closing near the high. Now, pre-market, it's going sideways. So it does look higher to me. This 15-minute chart, even though this looks excessive, this 15-minute chart is totally bullish. So if you, I don't know if you're thinking day trade, swing, sell, put, whatever, but if you want to day trade this stock, just time it, we'll time it with the futures in the sector, but maybe 10, 15, 30-minute high. It looks great. I love this 15-minute chart. Let me see if I have any more gappers to look like. IONS. Okay, so, I just look up here where it's trading, 49.70. It's just simple. This is how I look at gapping plays. I look at where it's trading, pre-market action. Is it clean or volatile? Just 49.50. And then I see where 49.50 is here. And there's no immediate setup for me there. It's gapping into resistance. So nothing to do there for me. STZ. I thought it was gapping, but it's not. And, just to remind you all, Greg did a phenomenal advanced gap strategies course. And, or maybe Greg can put the link in or you can check it out. A 7-step process. And, I'm going through them fast here, of course. But that's what he's going to teach you, how to internalize. And remember our 4, Pam, are you here? Remember our 4 stages of going from unconscious incompetence to unconscious competence. That's what that course will teach you. Here's one, actually, I just took a copy of it and put it in the our Facebook group. I said daily, the time frames are in alignment. So this one's gapping up here, wide range bar, pullback. Buyers are stepping up right now at 50%. It's trading at 65 bucks. Where's 65 bucks on my daily? It's gapping over this resistance. So now we have a breakdown failure. We have a shock. This was a very ugly close. Very ugly close. This looked like it would come, deeper into support here near 60 bucks. Now we're gapping above this prior high. Look, this high was 64.88. Look, we're gapping over it. So this is a nice gapping trade for me if it can hold. So I'm going to put that in a little thumbnail. Yeah, so I think Greg's going to, give you a coupon for this if you all want to become a master of trading gaps. And remember, trading gaps is either for a day trade, swing trade, the stock, or selling options around. So I love gaps as new trade opportunity. And it's normally $7.95. I think with the code he's going to offer you, it's cut in half down to $3.95. So that's a no-brainer. No-brainer. Did I miss any? RCI. Oh, no, this was the one I put in the Facebook group. My bad. So look, RCI, kind of a cup and handle consolidation here within this wide range breakout. And I don't have enough volume, but look, if it's 46.75, look, this is not an excessive gap. So if this, gap is real, I would love for it to come in the first 30 minutes, give us a nice buy setup. Look at the monthly here. It's, kind of deep retracement. I get it. But it's holding right on minor support, bottoming tail, reversal bar. The weekly, kind of a reverse head and shoulder looking thing with after this breakdown and deep retracement. So no, this was the one RCI that I took a snapshot. RCI, I like, that's a tier 1. It looks like, oh, STT, another bank. Yeah, another bank stock here. My minder shows it down $3, but seems that it's light volume, so I can't tell what's real. But this was a bullish breakout yesterday. This would have been an awesome put selling candidate, but for earnings. So, you know, I don't know what's real there. All right, back to the spiders. We have 1 minute to go, and the timing was perfecto. Okay, remember when we first looked at the spiders, they were up 19 cents. You know, they had a pre-market topping tail. Again, you know, the bulls couldn't keep it going, but daily is fine. I like this wide range bar on news, and you know, we talked about yesterday. We're consolidating in the upper half of this breakout bar. So I still want to sell some puts here today. We do nothing in the first 5 minutes as a general rule. But I'm gonna. So well, at least this Tesla. Oh no, that's Apple. Never mind. But the Tesla 290, 285 that we talked about earlier, even with a $6 gap down, folks, you could close it at 41 cents. So if you did close it, let's see what Tesla's doing, just out of curiosity, because we're in no rush here in the first 5 minutes. All right, look, so buyers are stepping up again. Wow. So if I were in this trade with a subscriber, I now have little to no fear about my 290 expiring today. This is a quick resolution to the bearish gap down. So that, you know, provided it holds now. So, but, you know, so that worked for him, even with the big gap down. All right, spiders. If we can take out a 10-minute high and get above this tail right here, so that's 269.18. So 1 minute into the to market open, I'm already creating a picture in my head, but I'm noticing the Q's relative weakness trading under their base. So that could keep the lid on the spiders right there. That could be the fly in the ointment, as I say. But, you know, I'll just continue with my thoughts. So a picture that I would like to see is just go sideways. I do not want a deep retracement into this bar. I want to go sideways for 10 minutes. I would like to see then the Qs possibly have a breakdown failure. But look, that's relative weakness right now. So on the daily, it's now 100% retracement of this bar. It still has an unfilled gap. But maybe it has a breakdown failure and trades. If the Qs can get back above this little pivot, I just don't want the Qs dragging me down. Isn't there a song like that, Greg? Don't drag me down. Don't drag me down. So 269.18. Then I would be comfortable just calling a low. So that's 267.72. So I'd go to the 267.50s. Let's see what I can get paid for that. $267.50s that expired today are only 22 cents. So we still aren't getting paid as much as I would like. But if my confidence is high on the trade, which it is not right now, you know, 220 bucks. Now I know Greg eats more than I do. We've been through that. So he would probably have to do a 30 lot to pay for his dinner. And now the Q's weakening. So it looks like the bears are still in control right now. What's wow, Apple. I was just gonna say, what's dragging the accused down? Whoa, look at that ugliness. Now, do you remember, folks, we got out of our weekly options trader of why I always love closing options. So I don't, it's like I can close my my insurance risk book. Made my money on that one, go to the next one. So we closed it at a nickel in this rally. And now, would I have predicted this? Heck no. Heck no. But we escaped trouble because it was a beautiful entry. And, you know, if you were swing trading it, momentum slowed here, doji bar. If you're a swing trader, you probably would have sold half, stop under the low, but then you had a disaster gap to deal with. Yeah, there you go, Gustavo. Maybe I can give you the mic because I know you're a singer. Gustavo's a pilot for JetBlue, whom I met recently. Great guy, great trader. And he's also known to sing. All right, so Apple is not being nice to the NASDAQ. Hey, let's look at this for a call spread for today. Amazon, wide range bar breakdown, extended daily at resistance. I'm just going to eyeball it here. So 1565. Let's see what we can get paid. And I'm just looking at day trades right now. Day trade option trades. And, you know, for the Qs, if you want to trade the Qs. All right, 1565. What can I get paid? I'm going to my option bookie. Come on, bookie. Wow, this is massive. Let's do the 1570. Yeah, because 1565. Now, see, again, it's a matter of how much risk you want. Do you want to sell the 1565, the 1567.50, or just my style is I like cushion. I like comfort. So the 1570. Wow, and they're kind of spready too. Shoot. But here, let me type it out. The Amazon 1570, 1580 bear call credit spread is 85-cent midpoint that expires today. So let's now watch the retracement. I do not want it to go over 50% retracement. And, well, it's kind of a big bounce right now. I would have, let me got to drill down to your 5-minute chart, of course. Yeah, big old bottoming tail on the 5-minute. Wow. But that's all right. I like this because we're just calling a top for a few hours. Well, 6.5 hours, a trading day. Yeah, Dan. Yeah, 1570. That's what I got here. Now it's 96 cents, and that's because of the bounce. 97. All right, I'm going to watch it. Let's continue to look at our other gap plays. We don't need to be totally focused on that, and then maybe want to see, this is a group effort, you all. So if one of you can watch it for us, that would be great. Okay, here's a nice little gap. It's a tiny one. It's a baby little gap. But look at the intraday. Look at the intraday and its relative strength. With the market falling, little snap is holding fine. So yeah, if somebody can watch that Amazon for entry as I look at some of these others. Wow, my data's slow. I was looking at puts. Now here, do you all check this out? And here's another reason why I don't mind day trading options. Snap right now is $15 even. You could sell a $15 put that expires today for 13 cents. So I have 13 cents of cushion that it could go against me, and that's my break even for today. But market falling here, so I'm a little on the cautious side. RCI, see the big bullish gap. See, I thought it was gapping closer to here earlier today. Look, see that dot right there, 46.75. That's where I thought it was gapping, and now the question is it gapping too much? I'm not chasing it here with the market falling. The gap's too big for me. And in Greg's course, obviously, he talks about what is big. I mean, what's a tradable gap? And then sometimes we fade big gaps because they're excessive. All right, the Oxy under the low looks great. All right, let me just go through some of these real quick. STT, ugly gap under the bar, but it's support, nothing to do. MSCC coming in, nothing to do right now, but still bullish gap. You can keep an eye on it. Waste management negated that pre-market gap down, nothing to do there. Our old Philip Morris still not ready. Still not ready. Don't rush into it. We're in Nicker long, that's fine. All right, our Halliburton and XLE covered calls were just textbook. And remember in yesterday's webinar, well, I mean, 7 days is the problem. We're similar with Oxy. We talked yesterday about, do we want to sell a credit spread for a week? And, we thought this would come in for a few days. So you could still sell a credit spread on something like this and just swing trade it. The chart will tell you when to get out. Yep, Twitter. Yeah, I saw that thing gapping up pre-market. No, it still looks great. Yeah, Twitter Relative Strength Award. Agree. It looks great. But you see yesterday, it also looked great and took you on a wild ride, but it definitely looks great right now, Tim. A gap up from this bullish 1, 2, 3, 4, we call it, because you had 2 consolidation days in the top range of this wide range bar. It looks great. So it depends if you're day trading, swing trading will dictate your management of it. Amazon, see, now it's greater than 50% retracement. So I'm not rushing into it. STZ, I'm going to keep an eye on this for Monday. It's a deeper retracement into this wide range bar. We like 50% retracement. It's a little deeper, but it would be for a put spread only. And it's look at these railroad tracks. This is what we call railroad tracks, meaning parallel, relative equal space in between, the 20 and the 50. The weekly here broke out after a breakdown. So this is a reverse head and shoulders, left shoulder, right shoulder, head. As long as it can hold right here, let's see what we can get paid for buying booze. Hey, I kind of like that. Buy booze, get paid. That'd be a good advertising slogan. All right, let's see if we go out 3 weeks. And then what put would I be comfortable with? Well, under support, right? Isn't that what we reviewed? So it'd be like the 2 1/4. And it's massive. So Greg, earnings, please. STZ. So 2 1/4. Well, it's spready as can be is a problem. Shoot. All right, earnings are fine, but just to give you an example, May 11, so that's 21 DTE 222.5 215 is $1.15 right now. Now, would I be doing it with the market coming in? Nope. Hey, Amazon weakening here again, and I like the hourly. But this is on my watch list for next week, and those are the reasons why. All right, Amazon. I only have a 15-minute chart on this computer, but on my other one, where I have more screen space, it is a beautiful hourly. Beautiful. Here, let me put it in right here real quick. I mean, I'm sure you all have your own setups too. Look at this hourly. Extended. You know, still bullish, still bullish, still bullish. Retest. Wide range igniting under support. And we're only calling, let me switch this to a 5-minute chart now. We're only calling we're making a bet on the daily high. So let's see now if this 5-minute can go up and give us a setup on the 5-minute, a double top of some sort. All right, snap. Wow, very nice. Very nice. Let me see what those puts are now on selling the wow, Q's still weak. Spiders. Look, remember I said spiders. I did not want a deep retracement into this wide range breakout on, well, that's 5-minute now. But same thing. This 5-minute was my wide range breakout on the 15, right? You see how I can just, do you see how I immediately just unconscious competence knew that? Look, here was our higher high, higher low that we were watching yesterday. And then decision resolved, broke out, you know, deep retracement. That's why we were like, whoa. So this retracement right here is a topping tail on a larger time frame on the 15-minute chart, right? I can, you know, I just know that. Now this 2-bar move is a wide range bar on the 15-minute chart. So pre-market, I said, you know, I wanted this to go sideways, and then over the high of this bar, I was going to sell out of the money puts, but the Qs were dragging us down, and Gustavo will sing that song later for us. So now I'm back to just looking for individual things, and we call it that they're on their own page. Snap today does not care what's going on in the Qs falling. Snap. So those puts, the $15 puts I was looking at earlier for 13 cents are now 5 cents. I mean, you could still sell those, you know, 50 to a, you know, 30 lot is 150 bucks, you know, other than the commissions. But now it's resolved. So I would even be comfortable going out to next week with this pattern. And you could sell the, you know, the 15s are 31 cents. That's massive because that's 2% for 1 week. Let me check earnings on that, and I'm going to post that as a play. So Greg's in it as, I mean, definitely day trade. I don't know if he plans on swinging it or not. But I would hold that pattern as a, come on. Greg, earnings on Snap, Yahoo's not giving it to me. Yep, GTLS looks great. Yep. You know, it's sloppy, but it's consolidating, and It's breaking out on the weekly. All right, 5-1. So yeah, let's sell a put. Let's sell a put on Snap, the 14.5 for next week. But I like this one too. So yeah, this one looks great. Because it's breaking out on the weekly. And this is a bullish 6-week consolidation in the top range of this bullish wide range engulfing bar. It looks great. You could trade the stock or short put if you get paid. Even with the market coming in, you're absolutely right. It is on its own page. All right, so yeah, we're getting a little busier now. So the 14.5 puts are 14 cents, 15 cents for next week. Or if you want to go tighter, selling the 15s, just know where your stop is, then you could get 2% of the strike price, right? What's 1%? Here, let me come back to this. And it's kind of just my 1% rule. So if I'm selling a $15 put, what's 1% of that? 15 cents. You're getting 2% for 1 week of risk. I like that. Let's if it didn't have earnings 5-1, I would even go out to May and I'd sell the $14 puts. And if you don't mind the earnings risk, that's not a bad idea, in my opinion. Sell the May 14s. And for that, you would get paid at our option bookie. Oh my God, Greg. This is frigging massive. You could, Jesus, that's big. The May 14 puts, Snap, 76 cents. That would give you cost basis $13.24 if assigned. Wow, Greg and I go back and forth all the time on, and I'm a little bit more, liberal with holding over earnings. Greg's like, nope, don't do it, and that's his trading plan. But look at this, on the monthlies, a mass deep retracement here on the weekly. But look at all this support here. So unless you think that, well, the market thinks earnings could have a surprise, but then here's another alternative. Sell 13 put for 45. That's still 3%. That's over 3.5%, and it's $2.15 out of the money. I mean, that is massive. Oh, ETFC reported. That looks fantastic. Looks fantastic. Had a higher high here, bobbling around. Now it's decisive breakout. Wow, Q's still weak here. So you all are finding some great stuff on its own page. ETFC. See, I would love selling puts that expired today. The 59 puts are only a dime, though. But that's how I do earnings. So then I look at the chart. Would I be willing to sell a 58 put for next week? And you can get 41 cents. That's not bad. That's not bad. All right, back to this GTLS. Was that earnings, GTLS, Tim? They expired today, so there's nothing there. The 60s are 0 by 50. Ah, great. So that's telling me that it's going to be too darn spreading. Yeah, it's too spreading for me to sell puts on. Oh, 2 days ago. All right, thanks, Tim. Yeah, this GTLS, I am so tempted to give it to our advisory letter subscribers, but I'm just the market is preventing me from doing that. So what I'm thinking is if it closes strong, then it's definitely on its own page. So I'm just going to wait, but that looks fantastic. You know what we can do? Let's just watch this on this 5-minute pullback. I mean, if it stabilizes right here, you know, this minor support on the 5-minute 61, 80, 85 area. God, I can't believe how strong it is with the market coming in. Spider's still lower. Mike, yeah, let me look at that. Mike, yeah, I was just throwing out ideas. I didn't post anything yet. So it depends if you want to sell it naked for next week or spread for next week is totally fine. And I always prefer spreads provided you don't have to give up too much of your gain buying the lower strike put. Or are you interested in holding over earnings, selling, you know, the 13 or 14 put? So if we, I'm pulling it up again. So for next week, snap, we could do the 14.5. So here's my rationale. You could sell the 14.5 naked for 16 cents. And other than a disaster gap, you know your stop. It's under this base. It's under this base, right where the short strike is. But if you wanted to do a 14.5 13, 14.5 13 midpoint is only 10. So here's the dilemma. I would rather sell the 14.5. Wait, that makes no sense. 14.5, 16 cents. Wow, this isn't doing my math properly. This is weird. Because 16 less 3 is 13 cents. I have never noticed this before on Thinkorswim. It's giving me the wrong math of the midpoint. Because the midpoint, if I sell it for 16 and buy it for 2, it should be 14 cents. Wow, this is weird. This is never... Oh, I know what's happening. For some reason, it's locking me in. I don't know why, just to even 5-cent increments. But the midpoint for the 14.5 and even the 13.5 is 16 minus 13 cents. So yeah, definitely do the spread. 14.5, 13.5 for 13. Yes, let's do that trade. $14.5, yeah, is now a little higher. Shoot, I gotta call them because mine's messed up. Well, here, let me manually put it in. Okay, 14.5. Let's say when I say when I hit my up down button, it's going in increments of 5 cents. I don't know why it's doing that. So let me manually change it. I'm going to put in 13 cents. You know, everything's loaded up a 10 lot for me. I'll start off with a 10 lot. There's my live order. So I'm not even getting filled at the midpoint. So I could either sell the 16s naked. Here, I'm going to do a 10. Look, it's 16 by 17. So watch, I'm going to see if I can get filled on the offer on just a tiny little pullback. So 17, here we go, limit, less my commissions. There, so I got 2 live orders out here. And then there's my buying power effect right there, 32.50. And now I will write this up for our weekly people. Greg, is there still noise at your place? I don't want to monopolize all the talking, and I got to post this right now. So feel free to ask questions, you all, and you know, I'm sure Greg can answer you via typing. Why I post this for our subscribers in the weekly options trader. So we're going to short the April 27. All right, I'm going to change. I lost my 16-cent bid. So I'm just going to take a 10 lot at 16. So I'm going to change that to 16. Now you'll see me being the low offer right now. There, so I got filled. I got filled at 16. So that was midpoint. But, you know, the spread is less risk, but you're giving up 3 cents or 2 cents. And I still have that order out, so I'm going to leave that one. And I'm going to post the spread for the subscribers. So see, then I have 2 trades on, and you can do any one that meets your trading plan. So we're going to short 14.5, 13.5. Bull put credit spread. So 16 minus for 13 cents. Stop. Yeah, Dan, no, it doesn't allow posting. It doesn't allow posting. My stops is going to be 14.50. So that's right at the money.
Okay, I think we're safe. Dan, if you wanted to post a chart, if you used something like Screencast, you could probably drop a link in there and people would be able to open it up. Looks like the cues are kind of following through on the spiders move lower yesterday, and they're coming into their gap fill here from a couple of days ago. Let's see if they begin to take hold. So far, the spiders have been hanging here. But it is that hourly sell setup that I talked about yesterday. We'll see if that turns into the measured move lower.
Which I would like, because then we'll be selling more puts on the spiders and getting paid for it more because volatility is going to be higher. Mike, oh, you're not getting filled at 12? So that's weird. Okay, well, yeah, I sold the 14 and a halfs naked at 16. But if you're buying the third, well, you should get filled if you do the 13s, if you want to do that. Yeah, because the 14s just went up in price. That's why. So I'm going to change this to the 13 strike. So 16 minus 3 is 13. And you should get filled on that. And I just sent a correction via Telegram. The letter just went out to the oh, shoot, I didn't even put a title on it. Darn it. See what happens when I'm trying to do so many things. Hey, Greg, what scan did you find Snap on?
I was actually watching it from yesterday.
Okay.
I mentioned it that
Yeah, I remember. Yeah.
So what I had noticed and said was that this thing is going sideways under its 200 period moving average, which would suggest lower. And yesterday, when the market was weak, it was actually up on the day. So a little tell there. And then you look at the 5 minute, it just had this nice pullback into the MAs, and it gapped up from it this morning. So the stars came together. Let's see how far it can go.
Yeah, I mean, yeah, the breakout on the daily obviously was a nice breakout on the hourly again. Another one of those, multiple time frames in your head.
I'm sure the weakness in the market is, give it some pullback on it, hesitancy. But anytime you have a bullish setup and a bullish market, you're better off, of course, than having the market fighting it. But Twitter gapped up; it continued its strength, so that probably helping it. Dan Hillphilly Girl said, take a look at ALGN 250 puts expiring today.
Let's do it. All right. Yeah, definitely not a swing trade. If it closed here, it's a bearish 1, 2, 3. Let me go back to my 15-minute chart. All right, so it's basing here at the low. I like the bottoming tail after making a new low, and it took out, see the new low here. You can see the new low there. With the market weak and this being a bearish daily, I just think there has to be better patterns to call a daily bottom on. So that's my only concern, because you're making a bet of it's going to hold its low. So two things, or a couple things. You're still fighting a bearish daily. If you did it, I would not touch it unless it made a new high. Number three, you're fighting, a weak market. Number four, look at the sector here, IBB. I'm assuming AGN's in the IBB. But look, IBB on the daily is a bear call credit spread setup. So those are the problem is because the stock is moving up higher, which means, the delta is getting smaller, which means you get paid less. And I did not get filled on my spread either. But, I did that 10 lot. I was trying to do both. I was trying to do naked and the spread. We talked about this XLE, did our covered calls. Wow, we're going to have to put, Apple is keeping the NASDAQ down. So I don't think the NASDAQ is going to get its sea legs until Apple finds a bid. Now, it had this bear gap here, another, continuation bear gap. Weekly now bearish engulfing, topping tail. I don't know what's going on in Apple land, but it's ugly. Maybe if it can take out these prior lows and then we get some type of shakeout on, an hourly or something. But yeah, I wouldn't touch this thing long or short right now. All right, so I'm just, looking at our opens again. Hey, look at our FND. Hey, Greg, just an FYI, we had a naked, it wasn't naked. We had a 55-50 put spread based on the weekly and monthly. We said we would take assignment because we want it long. But this, as of now, it's going to expire worthless, the 55 puts. But I'm just mentioning all this because I think we should keep this on our list for next week. Looks great. And I'm looking at puts for next week. It must have earnings because the $50 puts are pretty juicy and spready. That's the problem. GE, very whippy intraday, but if there were juice, it's still a put selling candidate. Let me see what we can get for the 13s for May, because now we don't have the earnings risk. Only 8 cents. Jeez. So see how 8 cents is not meeting my 1% rule? And that's for May. I'm not even getting 1%. Amazon. Yeah, it's off for now. Doesn't mean we won't get a Yeah, Dan, it's 1% of the strike price. And it's just a rough rule of thumb because it's going to depend on volatility. It's going to depend on how many days to expiration, and it's going to depend on how much cushion you have. But when I said that Snap is massive, here, let me show you my screen and show you why it is massive. All right, so here's 7 days next week. So I just got this 10 lot is all. I didn't get filled on the other one yet, but it's still there. So I sold a 10 lot for 16 cents, the 14.5 strike. What's 1% of 14.5? 14.5 cents. I got 16 cents for only 7 days of risk, and it was 70 cents out of the money, or 68, whatever the case, 65 cents out of the money. So here, let me get my calculator. Because you all see, these are the numbers I present all the time. So let's just call it 65 cents divided by 15. The 14.5 strikes are 4.3% out of the money. And I'm getting, good juice over the 1%. But now where I really was salivating about the juice was holding over earnings. Here's May. So 4 weeks out, it's over earnings. Let me show you the implied volatility. Look at this. Implied volatility rank is 95. Look at this. It's just been going straight up since this chart started creating. So it's massive juice. Wow, nice trade, Greg. Look at that. Oh, you said yes. Yeah. That's a nice trade. Sure. Now I know it's low priced, but that's how you just you do share size. But look at this juice, Dan. So the $13 strike is 46 cents right now. Now that, so 1% of $13 strike is what? 13 cents, right? So 0.46 divided by 13 is 3.5% for 28 days risk. So 3.5% is massive. And what is my cushion on this one? The stock's now 1525, so it's 225 divided by 1525. My cushion is 14.75%. That it can go against me and you still make 46 cents a share. Your cost basis, if assigned at 46 cents a share, would be what? Well, you've agreed to buy it at 13, but you put 46 cents in your pocket, so your cost basis is $12.54. So if you did, and somebody asked me this question yesterday on GE, saying, hey, Dan, if I was willing to buy GE at this price, could I sell a put into earnings yesterday? And I said 100% yes. So if you don't mind owning Snap at a cost basis of $12.54, then short the heck out of those $13 puts. And don't tell your broker to email me about his ridiculous reasons about that's high risk. All right, we finally are getting a reversal bar here and in the Qs here on this 15-minute time frame. And we're into this gap fill area, so right on cue. So that's a good sign. Spiders, holding this prior low. But now if the cues hold, then we might be able to start nibbling on some other things. Now, this is not a pattern for me to sell a spider put that expires today. This week's been harder to get those nice daily setups. But if I find something else on its own page that we can sell a put for today, I'm all over it. So keep the good ideas flowing. Yeah, Amazon's off because now with the cues holding, and we have 50% retracement engulfing. So yeah, Amazon's definitely off. Hey, what about maybe a Q's put spread that ends today? Let me check that out.
Twitter came back pretty deep. Let's see if it holds. This is where it would need to hold right here. So if we can hang on to the day anyway. Doesn't really damage that move coming off of the bottom.
QQQs, the 163s for today. So that's 72 cents out of the money are 25 cents, 26 cents now. So that's an idea. Let's watch and see if we can get a double bottom on the Qs. And then, 25 cents is $250. You just put a stop under the low and you move on. It's either going to work or not. But a stop under the low, your loss would not be big at all because we're trying to get in on the basement floor. But am I doing it now? No. I said I want to retest. That was just the first attempt for buyers to step up. Look at this RCI holding like a champ. Now, if this identical setup were right here where I hoped it was at 46.75, down here more, then I would have been all the heck over this. It's just, and people might trade it differently, but that gap's too big for me. But let's see if we can possibly get paid for selling some $45 puts. No, May is 10 cents by a quarter. So you see, Dan, let's say it's far out of the money, but 1% of $45 is 45 cents. And I'm only going to get paid 15 cents, which is a third of 1%. So it's not worth the risk in tying up my capital for a third of 1%. So instead, I'd just swing trade it once I got the right setup. But that's where you hear me talking about the juice, baby. Here's the GTLS. Yep. Yeah, okay. So look, it came in. It came in to minor support. You have a bottoming tail now. If the market can hold here, this, you could do a half lot right here. Add Monday over today's high. Greg, what are your thoughts on that for a swing equity for the advisory letter?
Which one, Dan?
I'm showing it, GTLS.
Hold on. Look at Skechers, SKX. This is, if a put spread was available on this when it broke out, I mean, probably earnings today, I think so. But yeah, that's the disaster type of situation for, credit spreads. If you don't know earnings are coming out, to step aside, you're just opening yourself up to a disaster.
Well, yeah, and so you know what, Greg, I should do a lesson on that because of short straddles of people who just look at the numbers. And I mentioned the same thing yesterday with Philip Morris, that the people who shorted straddles, and what a straddle is selling an at the money call, at the money put, with the assumption that the actual move is going to be less than the sum of the premium received. And the ones who did that on this and Skechers got absolutely smoked. Smoked.
Yeah. On this GTLS, look, it's a relatively slow mover. It had a nice bottoming tail yesterday. And frankly, there's just too much agonizing over entries when you think about swing trades. Share size it to put the stop under yesterday's low and just do it. You know, look to add wherever. And I mean, it's going sideways. The 5 is pulled back a little bit to minor support. Some buyers there. I don't know what it's going to do from here, but overall, whatever it's going to do, which is unpredictable within the context of that bigger picture, share size stop under yesterday's low and you'll figure it out. Because right now, I can't say that there's going to be a better entry or it's going to pull back or it's going to base or whatever.
Right. And here's here's just sometimes how I think of things. And that's why there's no right answer. I want in some of it. So you just buy a half lot. And then if it takes out the high, you can add, but then you're getting in at a worse price. Or if the stock fails and, you know, goes lower, then my loss is half as much than if I had a full size out of the gate.
Well, I think you said the same thing I did with different words. But the thing with, look, the advanced management strategies class will teach you the entering in this way and then what the next entry point is and how to use the profitable part of your trade to add to the shares and keep your loss the same. Your dollar risk loss the same, and you add to your position at the appropriate time, meaning a new setup where you can raise the stop.
Yeah, look at here. I got the controls. Look at Facebook here going sideways. That over the high on Monday. That might be a put spread candidate. Apple's still weak, can't get his sea legs back, but you know, those are two ugly gaps, and the velocity is down right now. It might, you know, find some buyers here at the prior low, but it's not being loved today. All right, Amazon. You see how, you know, I keep saying setup and then I action, but the setup, it has to do what we want for the setup before we enter, and this didn't. So no trade. All right, now IWM on my other computer, I'm seeing this, you know, nice engulfing bar.
It will keep a half of that back half of snap and just see what it does into the end of the day. But so there's no way you're going to make money, no way to lose. You're definitely going to make money on this trade, regardless of what it does. But it's coming up to the prior high there. That red candle on the daily chart, the top of it. I suspect there'll be sellers there. You know, especially, you know, market is starting to hold in this area, but let's see what it does. Maybe it holds on to the gain all day, and we'll take it into next week.
Okay, Tim, let's take a look. bestie. All right, Q's holding here. The hourlies are still iffies, but I mean, it's a good scalp long right now in the markets. Wow, that was nice. Okay, but your question in from the 23rd. Wow, you got a great price. Covered call here, up 4 days in a row. Well, good question. Let's look at this, Tim. Just because it's up 4 days in a row, you know, it's a multi-month breakout. So yeah, it's coming into resistance on the weekly, so it's you know worth watching. But here's what I recommend. Remember, we sell calls on slowing momentum. So if you want to use this, if you want to drill down, use your hourly as your drill down of the daily to get in. So just because it's 4 bars up doesn't mean it's extended. Do you think this hourly is extended yet? I say no. Compare this to our XLE when we had, you know, this double top after it was up, you know, look at this, far from the 20. This is, do a double top. So if you want a simple rule, wait for the spiders to make a lower high, and then you can do it with an extended daily. Does that make sense? Cool. And whenever in doubt, let's say you have a 10 lot or 1,000 shares. I don't know if you're long the call or the stock. It doesn't matter. But you can leg into it. So because there's nothing wrong, and particularly do it on the offer. So if the momentum continues, then you're getting price improvement. And you could do it, you know, like you're feeding hungry alligators. That's the beautiful thing when you sell into strength. So sell a 2 lot on the offer and just put another 2 or 3 lot out at a higher price and so on and so forth. And if you get filled, fine. And if not, you have your hourly rule that I just taught you. Or you can have the hourly rule for, you know, 2/3 of your position and then wait for it to trade in or prior bars low for some of it. And again, I'm just throwing out all different types of flavors of entries that are all intelligent. You know, with this Apple sell-off, whoa, that's a nice climactic on the hourly. Maybe we sell a daily on this thing because with it now, yeah, we talked about this yesterday, like with Philip Morris. Yes, this is a climactic on the hourly, and it depends how aggressive you want to be on the entry of how you drill down to the 15 and 5 and 2 minute charts for entries. But the 5 minute chart has a base. I mean, the hourly is still ugly because this chart here is showing you pre-market data also. But I'm just curious what we could get paid for a daily on this. Well, the 165 is only 18 cents. I'd rather the Qs myself for that quarter. All right, Qs held right where we were talking about them. Nice bottoming tail. I mean, I just wish the hourly confirmed better stabilization. There's that AGN, still a mess. All right, well, Spiders has a higher low retest here. Let me go back to the 15. Maybe we could get an entry. Yeah, see, look at this. So now I have a little bit more confidence than I did, over the past 30 minutes. And now I don't have the cues being that drain on my shoulder from that song that Greg was wanting to sing.
Dan, did you ever sell a covered coil on XLE?
Yeah. That's what I was just talking about a few minutes ago when I showed the chart. All right, so the spiders 267.5 puts for today are 27 cents. Hourly is still not out of the woods. Here, let me blow this up. Look, wide range bar, prior low. But I want to watch it. Even in, maybe another hour goes by and it goes sideways for a little bit and then does a breakout with the cues. Even if I get 20 cents, I might do it. Yeah, Greg, yeah, we did it. I actually did it into strength here when we had, buying, just felt like a buying climax on everything, all the oils. And we had a limit for the 75s that we got filled on. And then I mentioned this double top gave you a second entry to do it. Yeah, John, there's different scenarios. Yeah. SPY. Yeah, we remember Greg talked about the measured move lower, and then I said I would prefer that to get it deeper into support. Yeah, it just doesn't look ready today. Yep. Looking at my sectors, KRE relative strength again. Look at that. It was relative strength yesterday. And look at this 15-minute chart. Small gap down, wide range, consolidating the upper 50%, and it's breaking out again right now. So banks are doing great today. What about AXP? Yeah, somebody was asking me about that pre-market, and I said I love the 15-minute chart, but it didn't do what I did. It didn't do what I wanted it to, right? Which was, what did we say, like a 15-minute breakout, and particularly with the market falling, I wouldn't have done it. But tell me what you have right now in this pattern. Well, Dan, yeah, I only put it in for our weekly options trader. And so, we have the two trading newsletters, the Market Edge advisory letter, where we trade anything. And then, the weekly options trader, 10 days or less, just selling nakeds and spreads only. Yeah, I got to fix that because I said 13 cents a share and it didn't get filled there. So back to AXP. This is a bullish 1, 2, 3. So this will look great for Monday. So the question is, do you nibble here at the bottom of the inside bar or wait for it to take out the high today, or wait till Monday to take out the high to today's high? Q's getting their sea legs back here. But yeah, so even though the gap was big, too big for my preference yesterday, I mean, it worked. I mean, you could have drilled down to a smaller time frame and bought this 15-minute high. You definitely could have done that, stop low. But even though it's even more extended than it was on the gap up yesterday, this action is telling me that it's bullish and buyers are stepping up. So even though I personally didn't, want to buy it then, I'm willing to sell a put spread now as a 1, 2, 3. Let's see what we can get paid. Yeah, I mean, the juice isn't too bad. And so it depends if well, $100 put, which look on the daily is way down here. The $100 put is 59 by 65. So let's just say 62 cents. Now I know that doesn't meet my 1% rule. It's about, 0.6 of 1%, but it's harder to get my 1% on, a lot of these S&P 100 slugs. But if I have a compelling pattern, daily, weekly, monthly, then I might take less like that. And 1% rule is, you got to adjust it, like I said, based upon the stock, volatility, days to expiration, and how far out of the money. I guarantee you I could get my 1% if I went further out in time. It's a mathematical certainty. I just keep going out in time until I get it. I'll tell you what month that would be. There you have it, 21 days out. So the 511 AXP 100 puts are 122. So there you have it. That's 1.2%.
60 bits.
So I'll keep an eye on old AXP. Yeah, Greg, I think we should, in the weekend letter, put Oxy as just a swing short under the lows, because now we got 3 bars topping tails, which is 3 days of resistance on the hourly.
It's fine.
And Vince is asking you something on Oxy.
What's that?
Vince is asking you a question on Oxy.
You could add to it below the low of the day. What is, the stop, again, depending on how you share size it, I mean, do it there, just put the stop even above yesterday's high, and I think you'll be fine. Ideally, not too far away. I'm looking at the 5-minute there. Base.
So here, folks, remember I was going through all my gap list today, and I remember this one, ions. I said, look, it's gapping way up here into resistance. There's nothing to do. And that's what happens a lot with these gaps into resistance. All right, so this MSCC, I was saying a bullish gap breakout here. See, 65.50. But what happened? Deep retracement, just steady selling on the 15-minute chart, every red bar. So it's now under the open, and it's too deep of a retracement. So I have zero interest in this right now. SWK, we had that as a bearish gap. And I think we said, watch the 30-minute low. It's breaking down on the daily and weekly. Our PM, see, still can't, it's still in a coma. So is PM resting for another shellacking? I have no idea, but the daily is still bearish. Bearish pro gap, bearish volume, bearish wide range breakdown on the daily and weekly. But I guarantee you, it will set up eventually. It just depends at what price. STZ, remember I mentioned that one this morning? The out of the money puts. And look, all the way back. So now I have a green bar, another bottoming tail. Wow, here's a pro gap the other day, that another gapper I was watching, but the gap, say again, was too big for me, but it was a beautiful, beautiful pro gap breakout, daily, weekly. So let's look to our 15-minute to see where we could have got on board. This was a mess, sideways mess, gapped up, took out the high, rallied, pulled back. I mean, you could have got in there, but then it made a new low. Now, it's tough. There wasn't a no-brainer entry on that. Shop is going sideways here after breaking out. I'll keep this on my list for next week. Oh, this was the one we had in our... This was one of the ones I talked about in selling calls. On this breakout failure, under the low of this topping tail bar, we sold the 155s for like massive juice. And now over the high of this bar, you could stop out of those 155s because they're so far out of the money. We've made 20. Or just, well, actually, no, we sold the April 20th. So today it would have been expiring worthless. So if you did buy them back here, it would have been pennies. Robert, it's the 50. So I got the green is 20, 50, 200. And, we just use them as visual trend following tools to, speed up the analysis. But I can trade just all price bars. But, they're just visual aids when they're in alignment. And, Greg's the master at moving averages, being in alignment with support and resistance. All right, see, spiders, they couldn't break out. And now sellers are... like they're taking over again. Snap is my only trade of the day. That's it. Yeah, say Twitter. Wow. So, the dailies was bullish, but just like yesterday, he has quite the whip-a-rama intraday.
I like that, Dan. Whip-a-rama.
Yeah. I mean, look at that. If you were day trading that, do you have a headache about now?
If I entered it today, absolutely.
Well, or what about even yesterday? What, depending on where you got on board here, you had a headache also.
Well, if it pulled back that far, I probably would have got stopped out.
If you were a day trader, but a swing trader, it still held the upper half of the wide range bar. But I would not have been happy after this strength, 100% retracement. I would not have been a happy camper.
No, of course not. Nobody wants to see a thing like that on the time frame that they're looking at. And you know, when I say stopped out, if I would have share sized it for that, I have to stop it out. But like you said, from a swing trade, and I'm share size based on a swing trade, with a bias because of the big bar, I'm going to sit through that because I've seen time and time again small time frames deteriorate and look like the end of the world, and all of a sudden it's back to the races again, going higher.
Right.
And that's a conflict that everybody deals with that looks at intraday charts. And I can remember many years ago, until I advanced to the point of understanding multiple time frames from, you know, different pictures mean the same thing on different time frames, depending on, retracements and what have you. I mean, I used to look at so many intraday time frames thinking like I had to see that particular pattern to place a trade. And it was like, that was frustrating as well. It was always, you start second guessing everything. Oh, I have to see that bottoming tail but in that area and, forming in a certain way. Well, the oxy's starting to pick up a little steam here. I've got MRO short as well, and it's holding up. My goodness. I mean, don't these, you know, funds going after these energy stocks think that they're going to pull in a little bit? That's what I mentioned yesterday. At times, you looking at the chart, and the chart says this is supposed to go up or this is supposed to go down. I was talking about Tesla, and based on the daily chart and what it was doing intraday, and I don't know what it's doing here today. Actually rolled over in the gap fill. But anyway, you see what's happening short on a shorter time frame and thinking, what are these idiots doing? It's like it's not going in the direction it's supposed to based on the chart. And it's not going the direction I want it to go in, and sometimes it just is that way. And I've also, of course, experienced times where that whatever was happening against the chart, as I interpreted it or my position, actually evolved and turned it into a loser. So, it's always you learning nuances and different market environments or particular, stock that maybe news related to it. You just, there's that unknown. And that's why if you don't have a trading plan with money management rules and such, you are lost. John was saying when he started day trading, he only looked at 2 and 5 minutes. And John, that could be okay if you had some other concepts revolving around that. Meaning, like I would still want to look at the daily chart, but when I look at a daily, an hourly, and a 5 minute, but I could just trade off of the 5 minute because the three moving averages that I'm looking at tell me what's happening on the 5, the 15, and the hourly. So I know if all of those moving averages are pointing down or the shorter term ones are below the longest and pointing down, the odds are on my side. And then of course, I need a tradable void and, all of that. Well, that's okay too. We all had things that we didn't know how to take advantage of at some point. I mean, I was certainly in that case. I didn't know anything when I first started. Most of the, not most, I think pretty much every trade I did at the beginning, if you've read my first book, Trading OEX Options, I mean, I would just wake up and listen to the news of the day and come to some premonition as to whether I thought the market would go up or down and place a bet on it. It was pretty ridiculous. I don't know what Dan. Yeah, Dan is still showing a Twitter chart.
Yeah, here I'll stop here. I just saw that.
I'll put up some charts. I have to get the link, but I will be doing a webinar for Top Step Trader on Wednesday. I'll show you exactly what I mean about multiple time frames and moving averages and how to use that for trading intraday. Dan, the room is available, and to subscribers, of course, and it's available at a discounted price of $97 if you are a member in any way. Meaning, if you are a subscriber to weekly lessons, you get it for $97. If you bought Dan's $97 credit spread course, it's $97. If you purchased MTS and Dan's options full course, it's $47. And if you just say, hey, I think these guys have good ideas and teach some pretty cool stuff, it's $147. Lifetime per month, 33% off. Just scroll to the bottom of the page. Man, if I remember correctly, that is an employment agency or something. Whoa.
Oh yeah, Manpower. Yeah. I see they need to hire more women, I guess. The men are not getting the job done.
Has to be some news, right?
I think I had it in earnings list.
It actually says tomorrow, but maybe they reported them already. There's our Oxy hourly just starting to roll. It looks ugly, old Philly girl. That'll ruin somebody's weekend owning that thing. But I mean, look at the chart. I mean, that's what someone doesn't know how to read a chart and say, "What are you doing in this anyway?" I mean, look at that nasty crack in February, and then creating this resistance area, double top, M top, break, retest of the 200. Dan, why didn't you find this as a short, man?
Well, I had it in my list today. I went through it, but it wasn't. I was looking at it as a gapper, and it wasn't gapping. So, but I still had it in my list, and then I'm just going through my morning list, and so I guess what I should have. Well, so here's, even though it wasn't gapping, but I honestly don't do this. I don't set alerts up and down. I just eyeball all my stocks in a minder. But
Yeah.
I guess I was focused on other stuff.
Well, what did it come across your screen that it even your attention was brought to it if it wasn't gapping?
Earnings.
Uh-huh.
Yeah, so I went through all the earnings stock pre-market, and I said, oh, well, there's no gap here, so I have to wait and see what it does.
I see. On YouTube, I want to look at Netflix. It looks pretty good. I mean, it's just consolidating up at the high there. Netflix. You can see the daily chart. It's just so far a bullish little consolidation up at the high. There's nothing to do with it. It's just resting. Had a bullish gap up just above resistance, and it's hanging on to that gap. So it looks good. Spider's picking up some steam to the downside here. I have to open up some pages here. Catch up went lower, Dan. Didn't hold.
Wow. Wow, that's an ugly break. Yeah, I mean, we said we wouldn't touch it unless it had a nice breakdown failure or wide range bar out of the base with a 1, 2, 3, something like that. Similar to PM. I'm not touching that dog. Just because I said dog, I pulled up hog for the fun of it. Look at hog. Harley
It's
Davidson.
getting killed.
Wow, I haven't looked at him in a while, but look at hog started from a bearish pro gap down.
Remember some months ago we had a put spread on this. I'm not sure if that one worked out. I think it was somewhere over here last year.
Yeah, you're absolutely right. I remember that too, but you're right. I don't remember what happened to it.
I know it gave us a little Alka-Seltzer stomach.
At BMY also. BMY you mentioned the other day also, still zero reason to enter. There's no signs of turning yet. Eric had a big old pro gap, but excessive for me. ERIC. Yeah, Tony. Yeah, very simple, Tony. I just look for, if it's an option expiration day, Monday, Wednesday, or Friday on the spiders, I just wait till I have a confident intraday top or bottom and sell. On the day of expiration, I just sell naked. No reason to do a spread, in my opinion. And bullish pattern, sell a put. Bearish pattern, sell a call. I prefer the bullish patterns because, particularly after a multi-day sell-off, volatility is higher. So we're going to get paid more. Hey, Greg, John was asking about the webinar, and I actually got a few emails on it too.
No, I haven't sent it out yet. I was deciding whether I was going to edit some of it or just send it out as is.
All right.
It will go out.
Oh, Tony, we are not in spiders right now. We have some expiring today, way out of the money. But no, I said I was stalking the spiders if it did what I wanted it to do. But as you can tell, when we had that nice little pop on the 15-minute chart, I was waiting for it to go sideways and then a higher low. And as you can see, it didn't set up. So no, I'm doing nothing. Yeah, I have not been active this week. Last couple of days, there's been a day or so in there, zero trades. Today, Snap's my only trade. I don't push things when the The advisory flags are out. And that 1, 2, 3 on the spiders, I'm looking on the hourly. There's a big old unfilled gap down there around 265.
Hey Dan, Zach and I need your help. We've got cabin fever. We need to go to ER. Wait. Got some stuff to do. Cabin fever, man. 2 days. Paper last you were going with avocado to a pallet. You know what? And I felt so much better. I thought I should stick with that.
Wow. This is so ridiculous. Like, CNBC, if you have the app on your phone, they send you alerts of different articles that come out. And like, Democratic Party files suit alleging Russia, the Trump campaign, and WikiLeaks conspired to disrupt the 2016 election report. Get over it already. Get to work. I set alerts. I mentioned some stocks yesterday, like Grub, which is still just going sideways, another inside day so far. So it may take till next week. If it clears those highs, it's going to pop. And Pump actually moved a little lower, so maybe it needs some more gyrations. PUMP. Win looks good, probably for next week. Oh yeah, Shop, SHOP. You can see the patterns. I can up here. Just looking at another page where I just had to look at a whole bunch of things across the board. So like the consolidation here at the top of the wide range bar after the W bottom, just not ready yet. Grub, made the bottom and consolidating here, doing nothing. The Pump gap down, but there's buyers there. Something like this could be just being affected by the day. So we just leave it alone, see what happens next week.
Wow, Greg, I just saw Cliff go by the ticker. It's having a nice day on the daily, but nothing to do with it.
CLIF?
CLF, Cliff Clavin.
CLF?
CLF.
Uh-huh. Mm-hmm.
I mean, that'd be an awesome put spread, but Clifford, where am I at? Mm-hmm. Clifford Clark, is that your company, CLF?
No. our snap. Pulling back here about as much as I'd like to see it. I mean, either way, this is a winning trade, but it would be great if this thing could find some footing here and get turned around. We knew it was going to have this reaction up near this area. That's why I unloaded the second part of that back half. So now let's see if we can get this thing going and chop around, get moving back up again.
Maxwell?
Oh yeah, W day. That was the other one. Wide range bar, consolidating at the top. We'll see if it can get going through there. Let's see if it gets a low. It should be in this area here. Well, there's that measured move. Guess I should have taken a bet on that happening since I said it yesterday, but didn't. That's the disadvantage, kind of, of trading stocks and looking at many things, looking for opportunities. I was just focused on that. I wouldn't have missed it, but it is what it is. This tick went down to an extreme earlier, so that would suggest that we're, should see a low. And this doesn't track the same as e-signal. And by the way, neither does TradeStation. I remember from years ago. E-signal and Realtick, not too many people use Realtick anymore. But they were the most accurate with the NYSE tick. Could be getting another. Yeah, when you get used to something, Fabio, and it does have nice charts, probably the best. E-signal charts are really good too. I mean, but e-signal is a lot more diversified in how you can look at things. And I used e-signal, from back in the middle 90s, before it was even available to the public. So it was like, I think maybe the first platform that I used other than picking up the phone back in the day. So But today, I guess, look, eSignal doesn't have a program where you can use the platform. If you do so many trades, you get it for free. You just pay for eSignal. With Realtic, since it's offered through a broker, most brokers will provide it to you if you do enough trades. But it's like whatever, 250, 275 a month. So you do enough trades, you can use it for free. That's how I used to offer it. I mean, it's expensive. And then to the broker, as I mentioned, I think yesterday, Realtic, depending on your volume, they take a part of the commission too. You use TC2000 Silver. You can scan. You can connect IB TWS to TC2000, Fabio. Now, I know TWS. I mean, years ago it was as crude as could be. It's gotten better. But you pay data on TC2000, yes. But the silver, I don't believe, gives you real-time data. Yeah. How do I incorporate the tick? I incorporate the tick to be aware of tick extremes in the area plus and minus 1,000. I'd have to bring up the other charts, but I can kind of show you on here. I don't look at it in a candlestick format. I can tell you that. I just look at a bar chart, and I look at it on a 1-minute chart. And I don't look at patterns, meaning I'm not looking for candlestick patterns, and that's why I don't look at it like that. But I set it up with those lines like that, and I'll put one at plus and minus 600. We can do a webinar on this one day. So you want to have alerts down here, 900 plus, or that might do 1,000 and such. And when prices are trending, you want to see, if they're trending down, you want to see pokes under minus 600. Now, I'll tell you, last year was so interesting in that there were so many days where the ticks just stayed like between plus and minus 600 or less. And that was unusual because I hadn't seen that in the past. And now, we're starting to get more tick extremes, here going up above or toward 1,000 and, earlier today. So when it gets there, so at 10:54 is about when it got down to minus 1,000, and we can look and see, stocks started to bounce at that point or stabilized after that. And you can see that this is getting higher low ticks there. So the selling pressure is subsiding a bit. It could certainly pick up again. And, ticks are primarily staying below zero, which confirms, the bearish move. But as I said, the selling is subsiding, at the moment as we come into the doldrums. So a little bit of a divergence, taking note of that. And what else? Primarily extremes, divergences. Relative strength and weakness. So, a stock that's holding up, and you see as the ticks drop, stock that holds up is showing you relative strength. As well as if the market wasn't dropping here. And let's take a look. So here's a 2-minute chart of the spiders. Well, ticks are coming down here. Maybe we're going to get a W bottom here. That 265 area was where that unfilled gap was, or thereabouts. So we can track this. So there was the extreme. And then you can see it made a lower low. Ticks made a little bit of a higher low. And then there was the next extreme down there as it pushed lower. And now markets are beginning to stabilize. We'll see what they do here through lunch as they chop around. Do you time long entries in mind with the tick below? Well, one of the things that I'd look at, Vince, with the tick is, let's say it was a bullish day and the ticks go up to, plus 1,000. Well, my alarm goes off, says, hey, pay attention here. Things got a little bit of ahead themselves. And the ticks pull back toward the 0 area, maybe a little bit below that. And, the stock I'm looking at goes sideways, showing me relative strength. So the ticks being at 0, maybe minus 1 or 200 or so, and beginning to turn back around, I see that stock starting to move above a prior bar's high, some type of resistance. I'm putting those concepts together, as my timing, hey, hit the button. It should go. Now, Snap today. Now, where did my chart go? Shoot. Oh. I have this like out of the main platform. I could look at that. Let's take a look at Snap today compared to the market. So Snap, this was a buy above the high right there. And so I explained the daily where it was under the 200 and wouldn't drop, and actually held up yesterday. And look at this hourly. Just rounding kind of a bottom, and that pullback into the rising 20 and this little minor support there. I was like, okay, this is set up. It's gapped up. It's holding. Above that, it should pop. And I knew as it came up to that high there had to be some sellers. So, ideally, this does nothing during lunch, meaning just even to the latter part of the afternoon. Go sideways here at this resistance area. I know where there's going to be sellers, and let it hold up. And so we're looking for this morning's bullish price action, how that moved up, to hold up in this area. And this is the concept of absorbing supply and the interpretation of the price action. Is what we, seeing if it continues to be bullish. And if it can do that, well, then that opens up the door to being able to go significantly higher. And with Twitter, having a move, maybe now the snap is starting to get some attention as to, hey, you know what? Maybe something's finally going to go on over there. I've never used this app, seen it, see people put kind of funny faces on themselves with it, and I guess do some chatting. I don't know what the attraction is to it. That's a nice chart, Dan. What platform is that? Kind of has the bars coded somewhat like when I was explaining. And YouTube Hillbilly Girl says Trump tweeted that oil prices are too high, and that news caused XLE to drop. I don't know about that. I mean, a little extended there, so it's a natural pullback, but it just popped right back up again. It's crazy. All right, guys, I'm going to knock off here. We're in a little doldrums period. Let's see where things end up here in the latter part of the day. And we'll be back on here closer to 2:30 and assess where we're going into the weekend. Okay.